Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is the series where we analyze, decode Nifty on multiple time frames so that we can tackle the next day's market with much more clarity and confidence. And while we are doing so, we also try to understand how we can keep our trading extremely simple by not complicating it with using n number of indicators and also learn price action concepts and trading based purely on price action, right? So in case if you guys like the way I analyze Nifty and put out price action concepts before you guys, please like the video, subscribe to the channel, share it with your trading friends, as well as uh, put down anything that you might have to say in the comments box, be it feedback, criticism, words of appreciation. I am open to everything. Right. I told about trying to make a video for of RSI over the weekend, but I could not get some time. I am traveling to Japan around the end of this month, and I was busy with finalizing the itinerary and making the required reservations for the same, and I could not make the video. I'm extremely sorry for that, guys. I'll try to make that pretty soon. Uh, and on that note, because I am traveling, I might not be able to put out these daily videos for a period of around 2 weeks, starting the end of this month. I will definitely try every day. The time difference in Japan would allow me to post the videos on time for Indian markets. But in case if I'm not able to do so, what I'll still try is to put a synopsis or a short video format directly recorded from my phone, and I'll try to post it on my X or on my uh, Instagram account. The links for both are in the bio and the description of this video. Uh, it would a sincere request if you can go and follow those accounts so that when I am away traveling, I'll still try to post out those things over there. You don't miss out on the trade plan. So on that note, we'll start with today's video. Uh, We'll first start with what we had analyzed for today versus how what did we trade today, how did we trade today, plus what were the key takeaways from today's price action. Is there anything to learn from it? And then we'll plan the trading session for tomorrow. Right. So yesterday, what we had planned was we will look at a long in case if market opens flat and breaks up out above this with a pullback, we can create a long position for a short because we are expecting some profit booking in the markets. We can plan some short trades below this particular uh, trend line with a pullback or what the third plan was in case of a gap down opening, what we can do is we can look at a short below this particular previous day's low, right? This was the only plan. Now the market opened around almost flattish, and I was getting ready for a good trade today because the market was in a sideways consolidation last day, which was the Friday, and that was the reason I was looking at. But the with from 9:15 to 9:20, I the first candle that had formed, I decided that today might not be a very good day to trade. Right? Even if I am getting a trade based on my price action setups, I will be trailing very tightly and I will be taking quick stop losses or quick targets, right? The reason for the same I had explained in some of my previous videos as well, and I'm going to repeat the same for you guys today as well. So, a key focus or a price action concept that I use is the opening range. Right now, the opening range can be the 5 minutes range or the 15 minutes range depending on what the time period that you are looking at. But even if you look at the 5 minutes range of Nifty today, it was a big range candle, almost 100-point candle from low to high, and a decisive doji. Now, a decisive doji says only one thing, that there is no decision in the market. The market does not know if it wants to go up, if it wants to go down. There's confusion, which you saw by simultaneously two more further dojis inside the first doji, right? Now, this is something which I get extremely cautious of when I see it the first thing in the morning, be it on a 5 minutes, be it on a 15 minutes. If the range is big, now the range, the big range candle, if it's a decisive candle, say for example, it was a bullish Maru Bozu or a bearish Maru Bozu, you know, okay, that we are getting into some kind of a direction. There is some selling or a buying pressure, right? And we can look at trades in that direction. But in case of a big doji, big candle, big range candle, which is a doji candle, you know that you might not be getting a very good trade. And if you can see, for most of the, sorry, for most of the day, the market today was stuck inside this particular range. It broke down around 2 p.m. and then again went sideways. Now we are expecting some profit booking uh, till around these levels because a retracement can come down. There's no doubt in that. It might not come down. The market can still remain sideways. The markets are extremely uncertain and nobody can predict anything. So we, instead of predicting anything, what we'll try to do is we'll try to plan our days accordingly. So we'll just delete these lines. These hold no more value, no longer any value for us. There's only one trade that I took today, which was also again not a very good trade, but what I could see was that this is a the market was consolidating in a triangle pattern again around here, still inside the major range. And once it broke down from here, a pullback also came, which also acted as a perfect retest of this particular trend line breakdown. With a good inside bar, once it broke down, I took a short entry around here, around 12 o'clock. This is where I entered into a shorts with my SL right above this. Since I was getting a small SL, I entered the short. Markets immediately kind of gave a good pullback again. Did not trigger my stop loss, formed a double top here, broke down, again gave a. So once this particular breakdown came around here, I moved the SL from this to this. This is how I actually trailed in the live market that I'm sharing with you guys. And then again, market again gave a pullback, again came down. I exited somewhere around this particular candle because I could not see the selling pressure, right? Now you have to understand and try to focus on how the selling is coming, right? What they say about the market is market goes up using staircases and comes down using an elevator. That is the case around market. When selling comes, it has to be fast and it has to be furious. In case if that is not the thing, immediately after key important levels are being broken down, there are pullbacks which are coming in. So that means that the selling is weak and you should look at, and as it is, I had already told you guys that in case if you are looking at trades on the short side, do it with lower quantities, trail tight. Also, be quick to accept stop losses in case the market goes against you. So that is what I followed. The trade was okay, not a very good or a trade that I will be proud of, but yeah, it formed as per my setup, and that is something which I took, right? I have already told in some of my past videos as well. I trade trend line and triangle consolidation breakouts a lot on Nifty, and with proper pullback, obviously. And this is what we got, and that is the reason I traded. And we see this is the reason of keeping a proper SL. So this was the SL around here, and the markets even when you could see that okay, some people would have exited around here, okay, thinking that this is a reversal which is coming in, but no, you see the SL has to be has to have a reason around why the SL is here. The SL has to be logical, right? So because this was the last swing which was there, this was a retest area, that is the why the SL has to be uh, a little bit above this with some buffer, right? So this was the only trade that I had taken in the day today, and there was no other setup which was formed as per mine. I see weak selling in the markets. Now, let us plan uh, the trading day for tomorrow. We'll just shift to the daily time frame for the time being. Now, what do we see of key price action understanding is that after every big candle, the market goes into sideways for some time before again giving a big momentum based move. Now, this is a sideways price action which is happening, but then today's candle has also fulfilled three of the conditions which I follow personally, which I look at on a daily time frame. On a daily time frame, this is what I observe. Has does today's candle have a high which is lower than previous high? Sorry, a high which is lower than previous high, low which is lower than previous low, and a closing which is below the previous low. Right? All three conditions are fulfilled in today's market, and this is nothing but profit booking and some retracement, which we were already expecting. These are the safe levels till which we can, or maybe the levels of support in case market comes down here. These are the levels around which we can look at some positive price action to go long again in the market. The undertone of the market is bullish. On higher time frames, the market is bullish. The structure has formed. So we should not be biased, but we should definitely be much more active in trading the breakouts or the move towards the bullish side more, right? Now, for tomorrow, there is a very good trade setup which is forming. I have explained similar setups to you guys in the past as well. So today, uh, the market were mostly sideways, and then around the day, end of the day, it closed down near the day's low. Tomorrow, if the market opens flat or with a small gap down, gives us a breakdown of this particular low which is there. Say, for example, this is the candle which forms, and then the high of this candle gets taken out. We can look at a long trade around these levels. It will be a very good. So I'll explain the logic behind this. This is not something which is a random thing. So there's a very good and beautiful logic behind this particular trade setup which is there. So once the first thing that we have to establish is the premise that the market is in a bullish trend on a bigger time period or a bigger time frame, right? Then we need a day wherein after a good day of consolidation, the market closes around the low. Now, there would be many people who would have taken shorts around this area. There would be many people who would have not traded this particular miss. Now, even though it was sideways and does not look like a lot, but from around top till bottom, it was a 150 point move, right? From the day's high to day's low, it was a 150 point move. There would be people who would have missed out on this. And as soon as this low would be taken out, there would be people who would be entering shorts. But if the market is inherently or bullish on the bigger time frame, once it crosses this particular high, a good move on the upside can come, and that is something that we can trade, right? Uh, if that is something, see, this is something which is again based on a very, very clear price action criteria, or else with we can look at a breakdown from this particular level and with a pullback. Once the fresh new low also gets taken out, we can enter a short because we are expecting some pullback, and we can this is our good support zone which is there, and we can look at the markets coming and forming a base around here going sideways again before continuing the upward journey. Now, say for example, market opens flat, does some time pass around here, then gives a breakdown and then gives a pullback. We can take this trade. Market opens flat or with a gap down, form something like this. We can take this long trade. Market opens with a gap up, say for example, around this area. This is something where I will ask you to avoid trading, right? This will again be a area of confusion. Market has closed near the day's low, but then opening around here, it will be a bit confused. We'll wait for this high to be taken out, and we can look for a long trade above this particular high as well. In case of a major gap down, say for example, I'm not expecting that, but in case of a, we should not rule out anything, but we should, like I say, don't predict anything, be ready for anything. We should look at, say for example, market opens with a very big gap down, then we should look at some positive price action around this level, maybe a double bottom, triple bottom, whatever it is. You look at some signs of strength, some bullish pin bars, bullish Maru Bozu candles, which is coming around from here. We can plan a long trade for this particular gap to be filled. So this will be the simple and short trade plan. Now, compared to my previous videos, previously I used to give only two levels of going long and short, but right now I'm giving you multiple scenarios because what I got a feedback from one of my viewers was that to explain various scenarios of what can be expected based on the opening. I just simply used to say that a lot would also depend on the opening, but this is something which I have incorporated in my videos, and I will be covering everything of a flat opening with a gap down, gap up, major gap down. So this is the reason why you can see so many scenarios. Now, based on what happens in the market, based on where the market opens, we can trade as per the price under action reading based on our understanding of the market, right? So that's it from my side for now. Uh, but a word of caution again, please keep the positions light and trail tight. That will be the mantra for some days. I hope you guys have a good day, good trading day tomorrow. I'll see you guys again soon. This is your Nifty Guy signing off. Cheers. Have a good day. Thank you so much.